The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is Billy Ray Valentine speaking from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. And if you ever get to the big city, folks, go down and look at that Wells Fargo office, because that was the office of Duke & Duke. It's got a lot of memorabilia there in that city. If you love that movie, Trading Places, it's really worth the trip. Let's talk a little bit about the DAX index. As you can see from the daily chart that we posted, we did go up and make a marginal new high by a few points. If you look at the 15-minute chart going over the last several days, you'll see a lot of ABCD patterns, one of which we had early this morning, and then we had a pretty sharp rally back. That's basically showing you that the market is just, churning its wheels up in this area, waiting to see whether it's going to break out further to the upside, or this is a potential double top in the DAX, and we could see a correction. We'll have to wait to tell us that the trading gods, that's what you're looking at. Anyway, we've got a couple of really interesting patterns this morning that are forming. But before we get to that, I would like to go over that gold market, because that happens to be one of the patterns that we're looking at. We'll start out by what we were looking at over the weekend in the newsletter, and the fact that we had made a perfect 61% retracement in the gold on the weekly basis at the 1262 level. And of course, the market had a really nice move out of that area, which was also, if you'll notice it here on the 4-hour chart, and this was brought to our attention by the folks in the Tiger TV den, mainly Mr. Z, and he was pointing out that you had that 3 drive to a bottom pattern at that 1.618 expansion. And as you can see, when we hit that 1263 level, 1262, bada bing, bada boom, we exploded out of there, and we continue to go higher. And let's take a look at where we are with that, because we were trying to follow it as we go through to find out where the next either support or resistance, or where the next place would be where we could possibly buy it. And if we look at what's happening, this was as of the close yesterday. I wanted to bring this up because I didn't want to put the updated stuff in, because it's easier to see as it's happening in real time. You'll notice here that after that 3 drive pattern that we had down there at that 1263 level, remember that the harmonic number in the gold is $34. That takes it up to 1297. And you'll notice at that 1297 level, that'll be a 1.618 expansion of the move from the 4th of October into the 6th. And it's also a 61% retracement off of the last high that we made, which was also a $34 rally. Actually, it was $35 rally that occurred on September the 24th. So that's what we're looking at. Now, we've hit 1295 today, and everybody's going to say, well, is it close enough? Well, you're talking about $1.50 in gold. I think that's pretty close. So the next step that I would be looking for in the gold is it, and if we do think this is a major bottom, it's done everything that we've asked it to do. It's gone up exactly where we thought it was going to go, and it's backed off $4 from that level. So, if you're thinking of it in terms of wave structure or Elliott wave or Fibonacci or anything like that, the first Fibonacci number that you look at in a really strong market is the 38% retracement of the whole move, and that would be from 1262 to 1295. We're talking about $32 an ounce, and the 61% retracement on $32 an ounce is $19, correct? And if you did I do that right? Yep, it's no, it's $20. I'm sorry. And if you take $32 and you subtract $20 from that, that's $12. That'll give you the 382. So you take your high today, which is $12.95, and you subtract the $12 away from that, and that will give you the price of $12.83, and that happens to be right near the low before the last move up. We went from $12.84 yesterday, which happened to be a 382 off the smaller move, and that took you up to the $12.95, $12.96 level. So that's what we're watching today in the gold. Watch it very closely. Now, if it's really bullish in gold, it's going to take the whole day for it to get down to that level of $12.80, $12.83. Now, the $64 question is it going to stop at $12.83? I have no idea, but you know what else, folks? Neither does anybody else, because nobody knows the future. That's only that's held to the gods, and they don't trade anymore. But anyway, watch that, because history says if you get a really strong move out of something, watch for that 382 retracement, and then you'd be able to get a place to enter the gold market if you're not already in it. And I know some of the folks here at TFNN happen to be long that gold, and some of them were taking the profits this morning when we got up to that area, which I think is the smart thing to do. I didn't think it was going to run away and just take off above the $1,300 level, but that's possible, folks. If gold were to just explode out of here and get above 1,300 today without making a pullback, that is really telling you something. That tells you this thing's got a lot more legs than you might want to even consider, because if that does happen, put that into your quiver for your bows and arrows, because that could be telling you that the market is extremely strong in that gold market. It hasn't done that yet, but it does have the possibility of doing it. You remember that one of the things that we talked about was the fact that this XAU, this gold silver index, was acting extremely well. And of course, it certainly has. And we've got up to this right above the $88 level in just a matter of a day or two, 4 days, as a matter of fact. So that's a 4% move in that XAU gold silver index without any pullback at all. So there's positive things happening, and you'll be able to see. We'll see how it unfolds. Now, of course, if the gold fails here, it did nothing more than what it did way back on September the 24th, folks. It rallied $35. That's pretty much what it's done right now. So that it's still in a downtrend, but it's giving you signs that there's a possibility. Look at the time. Let's just do it again together, just so you'll see that there is a lot of similarities here that you need to look at it. Here, let's just get this up here so we can take a quick look at it. But look at this time of September 20th to September 24th, the 4-day rally. It rallied $35 an ounce, spot on. And then what it did, came right back down and made that 3 drive to a bottom. I thought that there was going to be, because that was a 382 retracement, there was a potential for that to be an ABCD move, but it was not, because you'll notice that 3 drive pattern held. Now, let's play the devil's advocate here just for the heck of it. What would happen if the 1296 or the 1295 was another high, and then we've got one more low coming down there? Guess where that puppy ends up? 1240, right on the money. So let's wait and see. I'd be buying on a $12 break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I was going to put a chart up of October hogs here, not because we're looking at October hogs today. The time to look at October hogs was making that 3 drive to a bottom pattern, and that's what I wanted to talk about today, because we have a couple of things that are really showing up here with 3 drive patterns that might be of a little bit of interest to you. But the thing to remember about a 3 drive pattern is that it has to be really symmetrical. I mean, it literally has to jump off the page at you to tell you that, yeah, this looks like a 3 drive pattern. The rule of thumb that I've always used is that if you have to force it, it's not a 3 drive pattern. If you start asking yourself questions, well, could it be this or could it be that, then it's not a 3 drive pattern. It's got to be as clear as mud. I mean, it really has to be clear. I mean, clear as mud. Anyway, that's what you have to look at. You have to have a beautiful ABCD structure. It has to end at the ratios, either 1.27 or 1.618, or very, very close to those numbers. And has to look symmetrical. In other words, from high to high and low to low, it has to look really good. Really look that is the way you look at it. Okay. The only asset that doesn't change trend is the stock market. That's correct. You're absolutely correct. It will never change trend. But since we're talking about that, let's just look at it, because we have that 3 drive pattern right now in the pattern in the Dow E-mini over the last 4 trading days. The 1.618 expansion of this takes you to 2272, I believe, and we've been to 2270 so far this morning. But you'll notice that there are 2 3 drive patterns. The larger one, of course, that you can see where you have the ABCD structure, and then you also have the smaller one, which is basically a 3 drive pattern with a reverse point wave that comes up to that same level in that same area. So that is just a pattern. That's all it is. But what's important about this is that it lines up with the numbers that you're looking for. So that's just another one. Now we have one other one that's totally unrelated to the stock market, and that is in the December wheat. And what we're going to do now, and remember, folks, we have a crop report coming in on October 12th. In the markets for grains. That'll be very interesting. We'll try to have our good friend, either Rich Anderson or Cy Monley from Sylvius Financial, to come on and give us a review of the crop report. But what we're looking at here on Christmas wheat here is a 78% retracement level, comes in at 431. We're trading at 435 right now. The ABC structure on this is 433. If you'll count the number of bars from the AB leg and you'll count the number of bars in the CD leg, that should be today. You're right at a very, very close to a 78% level, within a few cents of that. So this is what we're watching in the wheat today. This gives you a chance to buy wheat and not risk more than 8 cents. So you can become a farmer in wheat for $400, and that's a pretty good reason to look at it. So anyway, this is what we're keeping an eye on in both of those, because it's quite interesting. Now the other one that crude oil, yes, I'd be happy to look at the crude oil, because we were originally thinking that crude oil, and I still think that crude oil has a chance to do this. Let's just get this up here and take a look at it, because we've rallied $1 a barrel from yesterday, and I was assuming that we were going to get down to this 48.50 level. Now we're $2 a barrel away from that level, but the high that we made today in the crude oil was a 61% retracement of the previous high. So watch that level of 50.25 to 50.30 in the crude oil, because that's the 61% retracement of the previous high. The reason why that's important, folks, if you add the ABCD structure to this, and that is the high, guess what? That's going to take you right down to the 3-drive pattern on the the longer term chart. That would take you to that 48.50, washing out everybody that thought 49.25 was going to be the low, and then away it goes. But frankly, I don't think it's going to do that. And the reason why I say that is these metals, the gold and silver, are really starting to turn the corner and look very, very interesting. So that's just one of the things that we're keeping an eye on today. But the crude oil certainly does want to. In fact, it just got above the 61% retracement, so that's telling us it most probably has made some type of a bottom. So we'll pay pretty close attention to that as we look at these markets this morning. Now, I've had a request to take a look at natural gas, and if you'll give me 1 second here, I think I can get this up on the old screen, and we'll be able to take a quick look at it. Just give me a second. There we go. There's the daily, and then we'll see where we are. Oh, the natural gas is doing the same thing. Wow, this is very interesting that you brought that up, Cam. It is spot on. This is one of the things that we focused in the futures letter. Let's just get this up so everybody can see this, and I think it'll be okay. I hope this post's okay. You'll see that we have a perfect ABCD structure down there. We've already rallied 4 cents off of that level, which was a perfect 78% retracement. And again, look at, you can see the perfect ABCD structure coming right down into that. That's what most of these markets move. Well, they all move by ABCD, but when they line up really perfectly, like this one did, and I'm going to redraw it and then bring it up here to take you a look at. This is a very good example, Cam. Thanks for bringing this up. You'll notice that the ABCD structure that we had stopped exactly at the 78% level. Now, if you wanted to be, if you measure from the high, 1, 2, 3, 4, 5, 6, 7, 8 days down, in the AB leg, 1, 2, 3, 4, 5, 6, 7, 8 days down in the BC leg, and that's a perfect ABCD pattern, and it stopped right where it should have. And now, if you bought that, you've already made your first profit objective, because you don't have to risk more than 3 cents. So I would put your stop at break even and let it rip, because this could easily, if you're looking at this natural gas, if you just shifted that same ABCD pattern over just to the next, to see what the next thing is going to be, you'll be able to look at it, and you'll be able to see that the it would be almost $3. In other words, another 13 cents higher just to make the same move in the BC leg that it made before. So that's why it looks so interesting here in natural gas. Thanks for bringing that to my attention, Cam. That's worth the price of admission, folks. That's about as perfect as a chart as you could find. Now, we're looking at perfect charts in the Dow Jones, and we're looking at perfect charts in the wheat, but sometimes they fail. And this is what you've got to remember, that when they fail, you got to bail and just stay out of the way. You don't want to have a death by 1,000 cuts, that's for sure. Be careful. Now, the other one that looks interesting is this Canadian. We got a break coming up here. We want to review this Canadian dollar trade, because here again we're going to be looking at what happened in the past and what's happening into the future, and how you try to look to see what is going higher. Okay. Someone's asking me, Mr. Peak, I have no idea whose IQ is higher. Once you get higher than 85, I quit counting. So that I don't know. So we'll have to wait and see. But anyway, we'll take a break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, what I've done is I've posted this 4-hour chart of the Canadian dollar that goes back to September the 7th, showing you all of the retracements were spot on, 61% retracement. What we're looking at here is what we were forecasting for the next swing is to come down to this area of the 125 area, not much lower than 124.80, because if we broke below the 124.80, that would tell us that we're probably getting ready, to getting ready to do something a little bit more dramatic. Now, all I'm going to do now is I'm going to just give me 1 second, and we'll put this up here so we can see it, and we'll be able to see right where we are right now. Hold on, give me a second, boys and girls. Put this up here. You'll see that we are spot on at a 78% level right now. Just give me a second and we'll get it up. Stop yelling and screaming. Hold on. Here we go. And there you'll see we pull down one more time. These swings, this is the strongest correction that we had since September the 22nd. So this is the moment of truth that we're looking at here in this Canadian dollar, because if we break below the 124.70 level, that's 25 pips from where we are right now, that is a trend change, folks. That'll be the first time you've had a bigger correction than since September the 8th. You've broken the major fib point, and you've also broken this small trend line that's existed over the last 10 days. So that's what you'd be watching. But right now, it's just setting right at the 78% level, just begging to be bought. And this is what we're looking at here. There's a small ABCD structure at that point also, but let's just see if we can do that on an hourly basis to show you, because this is why it's so much fun. I think we can do this without too much trouble. There we go. We'll bring this up here, and you'll see where we are right now with this ABC here in the Canadian dollar, and that's what we're watching. This is really important where we are here in this Canadian dollar, this 124.90 level, and anything below 124.70, it is toast. It would not be any good at all. So pay attention to that. I think that's one of the key things, to really watch. I'm having a question about the gold. Could it have a chance to go up to make the 1296, which is the exact number? Folks, we hit 1295.10. That's within 90 cents. That's like that's a pretty close. So I don't know the answer to that. All I know is that it's an important number. But I would be looking for the pullback to buy, and I think the number you want to watch on that gold is 1283. That's really what it looks like from my standpoint of looking at it, because it made that 61% retracement, on the weekly. That's really important. Oh, we got a caller from the home of Duke and Duke, Philadelphia, Pennsylvania. John, are you there?
I want to trade OJ and pork bellies today.
Ah, you want the old breakfast trade, huh? Hey, John,
where is Ralph Bellamy and Don Amici when you need them?
Yeah, isn't that the truth? John, don't they have a bar there called, I forget what it's called. It's at one of the hotels that it's from trading places. I forget is it Miss Ophelia's? Is that what it's called? In one of the, I'll find out.
Yeah, please find out. If I knew, which is quite likely, but having forgotten, it escapes me right now. So I'd love to hear that. Absolutely.
It's on Washington Street, but I've been there, and you know what? It's called Valentine's. That's what it's called. I'll find out, John, and I'll let you know, okay? Because I know you live there. You'd probably like to go there. But anyway, What can I help you with, my friend?
We'll have to meet there in the future. Sure, I'd like your guidance, please. I am speculating in the euro, and bigger picture. The euro has rallied from a low of 104 back at the start of the year, gotten up close to 121, backed off to 117. I am just thinking there's a decent shot that another multi-week rallies ahead, so long as we hold the 117, 116, those prior highs, the highs that occurred back in 2015 and 16. And so I'm long. I bought. I was dabbling the past week and unsuccessfully, basically a scratch. Bottom line is I did rebuy it yesterday, didn't get it Friday on that spike lower. But now that we're back up to 118, could you show the charts that you see as relevant that would help us understand whether or not we're heading back towards 121, or if this is just a bounce that's likely to fail and we'll want to either get flat or shorted?
This I can't tell you, but I can tell you this. I posted the weekly chart, and I put this in the newsletter because I thought it was very, very important. If you'll look at this going back over the last 2 years, the old highs that we made were way back there at 117. We shattered those and went to 121. And then over a 5-week period, we came down to test those old highs at the 117. We went to 116.80 on a quick move down. But if you'll notice the moves during 2017, all of the corrections were equal. You can see those little red boxes there. Those were exactly equal corrections. It took somewhere between 5 and 7 weeks, and that's pretty much what we've just seen here in the euro. We've rallied 130 pips off the bottom, which is a very powerful thing. We really needed to clear 118.50 would be the first place that I would say, well, this has got a little bit better traction than some of the things that we're looking at, but it certainly looks that way. The other thing that is could be additive to this is the fact that, there's a correlation between, the euro and the gold market, and this gold market looks like it has really strong legs, and this could be an indication too that maybe the euro is also going to have it. But the euro trades, really beautifully, John. So when you see the smaller patterns like on a 4-hour or an hourly chart where you see the ABCDs, I would highly recommend you take advantage of those, because this market is traded by everybody in the world. It trades thousands of times more than the stocks and bonds, and you never know how much the volume is because it's not reported accurately, but it's a huge market. I mean, it's just big, and there's everybody trading, and that's why it's so beautiful technically. But the key level, I wasted too many words. When we get above 120, this thing could really move, and 125 would just be a minor stop, in my opinion. You could easily get it to the level of 130, 140. Remember, the old high in the euro was 165, so we're 43 points away. So there's a lot of room there between the old highs, and the euro has had swings over the past 20 years, from 65, from 85 to 160, 160 back to 85, 85 back to 150. I mean, it's all over the map, so it gives you a lot of opportunities.
Thanks for that. I hearken back to your leadoff this morning on 3 drive patterns. You mentioned wheat, and there was something else that escapes me now. But as I'm looking at the
John, we got to pay a few bills here. We got to pay a few bills. Stay with us. We'll be right back, okay?
Thanks so much.
Okay, we'll be right back with John from Philadelphia, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I've posted the chart, and we're talking with John from Philadelphia. I've posted the hourly chart of the euro. You asked about the 3-drive pattern in the euro. As you can see, that's what happened on Friday when we went down there. It was a perfect ABCD structure, just like we were talking about. In the two we were talking about today, of course, was the December wheat, and then, of course, the Dow E-mini at 27.75. I don't know where it's trading right now, but that's those are the ones that we're what we were looking at. So keep an eye on that as we look at that. Did you have any other questions, John?
By the way, thanks so much on that hourly euro chart with that beautiful. I mean, that textbook 3-drive to a bottom pattern. That would be worthy of including in your textbook on the 3-drive pattern. That's just perfect. The question I've got is this: now that the euro has rallied 116.70 up to 118, just as a short-term trader, can you just share what you'd be thinking about as a trader navigating this bounce? I mean, is this something you stick with? Do you book gains? What tactics evolve out of seeing that analysis, please?
Well, if we look at the chart that we've just posted here in the room of the euro, you'll notice that this is an hourly chart. For the last 4 hours, it has been flirting with that 78% retracement high that we made back on the 29th of September, hasn't it? Now, the only problem is you don't have a really clear ABCD pattern leading up to that. You have some smaller ones, of course, but not a really clear one where you've had a 60 or 70 point correction in the euro. All the corrections that we've had in the euro since the bottom have come in have only been roughly 25 pips. There's been 3 or 4 of them, but nothing of any substance. So I have to stand aside here, even though it's a bear market, short term. From the 121 level, but the way that it came out of here so quickly is very, very important, because it's a bigger rally than anything we've had over the last 3 weeks, and with no correction in between, it tells you that there are people who are more willing to buy it than there are willing to sell it. So I'm waiting to see what's going to happen here. Part of this is being influenced, John, by gold, because gold looks so bullish that I'm waiting to see what happens to that. But at this level where we are right now, 117.95, which is the 78% retracement, it wouldn't be unconscionable to sell it here with about a 20 pip stop, because if it gets above 118.15, you're most probably going to be moving. Now, there's a big fundamental factor out there that I don't really follow, and that's coming from Spain, because if Spain breaks up into two countries, Barcelona leaves, that would have a pretty significant influence on the euro, possibly, but maybe they'll even use the euro if they split. So I don't listen to that stuff. So anyway, this is where we are. We're right at the 78% retracement. There's nothing clear as far as ABCD patterns into that time frame. So that's really what I'm looking at.
Terrific. I appreciate that much. One last thing, in fact, if you need to take another caller, I'll jump. But on the Treasury bond futures contract, I began top picking this back, I think it was Monday, September 11th, the day or two after a high formed. And it's fallen nicely from the 158 down towards the 152.51. Now that it's come down, I find myself at a loss, having booked gains, but I don't see a buy necessarily, but it's so far down. Shorting it here feels like pressing it. I'm wondering if you can share any points of illumination on this, if something's clearer to you, please.
Okay, I posted the 4-hour bond chart that takes us back several months, and here again you'll see the 3-drive pattern that we had that was a perfect ABCD again at this 158 level. In fact, you and I were walking through that together with the folks here at TFNN way back on September the 15th when that was occurring. Then we had the big move down. We had the 38% retracement back to 155.08, and now what we're looking for is a final move down. I believe you're going to make that big ABCD pattern that we've formed here over the last several months, going back from September the 15th. That takes us down another 1.5 to the 150.20 level. And that's where I think you could possibly get another rally of probably 382 format. But this overall picture in the bonds, John, it's easier to be a seller than a buyer. Because the long-term trend in bonds, changed, 18 months ago. The Fed hasn't allowed rates to go, down, but the rest of the market is certainly telling you that interest rates are going higher and not lower. So I'd be looking, if you could get a 382 retracement here from off the last high at 155.08, that would take you up to the this 150, well, not very far away from it, 152.21, and that would set up a perfect ABCD pattern down there to that 150.20. So watch 152.21. So we got 152.20, 152.21, and of course, if we get above 153, all of this doesn't mean anything. But right now, that's what we're looking at.
Hey, that is so terrific, laying out those parameters and the what ifs. It's that sort of process I find so helpful in kind of teaching how to set up and look for future trades. So that's terrific. I appreciate it so much. Enjoy your stay in Philadelphia, and we'll meet at that unnamed bar for a drink.
I will have the answer before the end of the show. I have a thing called Google. I was the one that discovered Google. You know that? You remember that, don't you?
Yes, right.
Me and Al Gore.
TVs, right.
Hey, listen, John, thanks for all you do at TFNN, too. Some of the trades you post are just absolutely fabulous, especially that gold trade on Friday at 1263. That was just spot on. So congratulations on that.
My pleasure, and thanks so much for your help.
All right, we'll talk to you later. Okay, folks, we're going to get back here for a little bit and talk about some of these other markets. We want to double check here to see how this, let's see, we did get to 12. Well, we're trading at 1227.89. That's above the 1.618 by about 10 points in the Dow E-mini, but that does complete the 3-drive pattern. Whether that'll work or not, I don't know. We've had an unusual thing happen in wheat already. Wheat has rallied 5 cents this morning, so maybe it's not going to make the 433 level. We got down to 434. We might have missed that by a point. but we'll have to let the market gods decide whether that's going to be the case or not. We're having gold rallying a little bit. Now we're back to almost the old high. Folks, watch this gold here really closely at this 1296, 1297 level. That is really an important number. There's no other way technically to describe that other than being an important number. It just is really very, very important. So I guess I can't be any more emphatic than that. So we'll see. We'll take a break here. We'll get back and we'll talk about a couple other markets. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the name of the place, Mr. Cheney, Mr. Z in the room, it's called Winthrop and Valentine's, and I believe it's at the Westin Hotel in Philadelphia. So that's the name of it, Winthrop and Valentine. The problem is it has terrible reviews. I mean, the reviews here are they're really not very good, except the drinks were terrific. Since you and I don't drink, I guess it won't make any difference. Anyway, let's get on to the rest of the markets. We're having a little bit of a sell-off here in the NASDAQ after we made a new high. We've actually dropped about 20 points, which is really nothing. The gold has now made a new high. We got up to 1295.60. Remember that 1296, 1297 is just an absolute monster number here. So we want to pay very, very close attention to that. But even more important is to pay attention to the $12 to $13 correction if we get it in gold, because that's going to be a 382 retracement. It's something that we really need to really look at, because it has a potential to have big legs, folks. I mean, it really does. It's really setting at a level where it could have one heck of a move. So let's pay a little bit of attention to that as we go through and look at some of these charts for today. We have a crop report coming due in the market for grains. That'll be on Thursday. Someone's asking a question, what do you do with wheat here? Folks, you can't do anything with wheat. We've only rallied a nickel off the bottom. It can still go down there and test that level one more time, so you just have to be patient. That's a 3-drive pattern on an hourly chart, so you've got to give it a little bit of room. So just stand aside, put your hands underneath your thighs, and not touch the keyboard to put an order in, because wait till it gets to your price. You got to be like a doctor in this business. You have to have patience. So I would just be patient and wait and see what happens. We're right up to the 152.20 level here in the bonds, which is the really critical level to look at. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.